morning, everyone. Jordan Tracy from State Farm. I'm a State Farm agent in Royal Oak. Many of you are probably familiar with State Farm. We are the #1 auto and home insurer in the country. The highest claim satisfaction. What makes my office different is we take a lot of pride and passion in educating our clients, making sure they know exactly what they're covered for, what they're not covered for, how to mitigate against those losses, and just really know what they're paying for. Now I know we have some questions this morning, so let's go ahead and get to those.
So what's the most often overlooked item when it comes to homeowners insurance?
Thank you, Doug. When it comes to homeowners insurance, there's really, unfortunately, quite a few things, but two of them really come to mind. The first being making certain that you have a backup of sewer and drain endorsement on your homeowners policy, especially if you have a finished basement. What most people don't realize is that any sort of flood damage is specifically excluded from the homeowners policy. Water seepage, completely excluded from the homeowners policy, and you actually cannot even purchase coverage for that. Now, you can get a flood policy through FEMA. Problem is number one, it becomes very expensive and difficult to get if you don't live in a flood zone. The other thing there is that it still does not cover personal property below ground. So with the backup of sewer and drain endorsement, it usually comes with coverage for $5,000 to $10,000 for any damage to the structure, any mitigation. It also covers items such as a refrigerator or a freezer, any food inside, a washer and dryer, any clothes inside. Basically, it's not going to cover a couch, it's not going to cover a box of pictures, but what it does do is provide coverage for something that usually would not be. The second item I see a lot is coverage for jewelry and fur. See, your homeowner's policy provides personal property coverage, actually quite a bit. It's about 75% of what your structure is covered for. However, there are certain items that have limitations on them. Items such as jewelry, fur, firearms, computers, silverware, business property, all these have limitations on it. So your basic homeowner's policy comes with coverage for $1,500 per item, a total of $2,500 for jewelry. You can increase that. However, usually if you have a larger risk than that, it's better off to schedule those on a separate policy. That way you can have them covered on an all-risk basis, not just covered against theft, not just covered against fire, but covered if a stone falls off and you drop it down the drain, or you left it at Starbucks. Provides a lot more broader coverage, and you can do it without deductible, or at least choose your deductible.
Jordan, I was wondering what types of insurance coverage should young people, such as under age 25 or 30, be buying that are often not quoted when they go to these online insurance websites?
Thank you, Scott. Unfortunately, what happens in the insurance industry is they place young drivers under the age of 25 into what I call the one-size-fits-all box of insurance. The problem is there is no such thing. Insurance is not one-size-fits-all. The assumption is that the person's young, they have no assets, therefore they're getting quoted these policies with state minimum liability limits on it. A couple things to consider here. Number one, is the young driver, is that their car that they own? Or are they driving a parent's car that maybe they purchased for them and they're on the title? If that's the case, we need to be asking more questions to make sure that everyone is insured properly, that everyone's taken care of. Another thing to consider there is just because they don't have assets now doesn't mean they won't in the future. Michigan, like many other states, I'm not an attorney, but Michigan, like many other states, is a future income state, meaning if you're sued in an auto accident and you don't have the assets to pay, your future income can be garnished. So there's a lot of different considerations to take into account there.
Thank you, Jordan. And I do have a second
Sure.
question. So, is there anything that parents can do for children that are younger like that, under age 18 or 19 maybe, to help lower their insurance costs? Because I know it can be quite expensive.
Sounds like you're talking from experience. It's there's no question that insuring young drivers, difficult on the wall to say the least. A couple things here. First, avoiding tickets and accidents. Tickets and accidents, it sounds like a no-brainer, but when you start with your premium already high because the insurance company thinks you're going to have tickets or accidents, that is going to send it through the roof with just one, where maybe one at-fault accident or one ticket for someone like yourself isn't going to be dramatic. For a young driver, it's going to be. At State Farm, we have a program called the Steer Clear Driving Program, which actually rewards for that safe driving. It's a program where they watch multiple videos. It goes over various safe driving techniques, driving different weather conditions, and it also spends a lot of time talking about the epidemic that is texting and driving and distracted driving. Once they complete that program, get a little bit more education, hopefully make them a safer driver. We also give them a large discount on the policy that they can keep until age 25 as long as they stay away from those tickets and accidents. The second program we have for young people is a good student discount. So if your young driver is in school full-time, has above a 3.0, we can give them a significant discount for having good grades. That's a win for parents, the student, for everyone. Now, the other beautiful thing is say you have a driver, they go through high school, then they go to college, maybe they graduate with their bachelor's degree at 22. However, the insurance company doesn't see you as an adult until age 25. That's when that first major break takes place. So we're not going to penalize them for going and getting their education taken care of. Once they graduate, we can simply take a picture of their degree or their diploma, and they will automatically keep that discount until they're age 25, to which point they'll get a large break there.
Oh, wow, that's
Thank you.
nice.
Hi, Jordan. In this insurance advertising environment, save money, name your own price, etc., how do you set yourself apart and add value to your customers' insurance program?
It's a great question, Craig. There is no question that we are living in an environment to where insurance companies are literally advertising people purchasing generic boxes of insurance off of the shelf. The problem is that your insurance is much more than a document to have in your glove box. It's much more than a piece of paper to satisfy your lender. This is what protects your assets from being taken from you. You spend a long time, a lot of hard work building your assets up. And an accident is just that, an accident. You do not want them taken from you because you weren't properly covered. Basically, what I'm saying is that the name your own price gun is fantastic until you need to use your insurance. So if you're in an auto accident and the person in the other vehicle is badly injured, maybe killed, and them or their family sue you, that is not the time to figure out if you have the right coverage or not. Something that we do at my office is we take a lot of time and pride in going through with each individual situation, making sure that everyone understands this is exactly what this means to me. Painting the picture of if you are in that auto accident and someone does call 1-800, call which attorney, that you have the proper coverage, that you can go to sleep at night knowing that we took care of it on the front end, and that's what we're going to do. We also understand that insurance is not a set it and forget it type item. Your life is going to change. Maybe your liabilities increase, maybe they decrease, but we understand that either way. We're going to offer annual reviews each year to go over, make sure you're still comfortable with the coverages you have, make sure if there's any changes that we are changing and growing with you.
I'm getting used to using apps on my phone for my business transactions. For tech users, what tech-related features and benefits are available to your business?
Well, we do have an app for that, Patty. So one of the things that we help customers with as soon as we get them insured and get them enrolled, get their documents over to them, is we help them enable their accounts on statefarm.com. That way they can go, they can have 24-hour, 7-day access to their insurance policies. The other portion of that is downloading the free app, State Farm Pocket Agent, for your smartphone. With Pocket Agent, you can bring up your proof of insurance in real time on your phone. The police and Secretary of State in Michigan do accept that now. And actually, as a sidebar from that, I actually recommend to my clients that they do not keep the proof of insurance in their car, in their glove box. If your car is stolen, this person now knows where you live. So having it on your phone is actually a great tool to be able to bring up at any time. In addition, if you have any questions and you don't want to talk to us, which a lot of people don't sometimes with millennials, you can send that as a text message to us. You can contact us directly through the app. Let's say you're shopping for a new car and you're at a dealership, and you want to see how much of this new car impact my insurance. You can actually take a picture of the car. The app does have vehicle recognition software to where it will load that vehicle into the quote. You can send it to us, that way you can get a price estimate on it. So whether you need a quote, your proof of insurance, ask a question or pay your bill, we got an app for that, we got you taken care of.
Impressive.
Jordan, which is the optimal auto deductible on a cost-benefit basis for us?
Well, Bruce, that's a great question. That's a question that used to have a very direct answer to it, but now as insurance pricing models are becoming much more sophisticated, there's really not one size-fits-all answer to that as well. Insurance has become very individualized on your age, your credit, your location, your zip code +4. That's actually how detailed it gets down to. So whether you live in one side of town or the other, whether you have a bad driving record, the price per deductible can be pretty large. One thing I will say though, that when it comes to comprehensive coverage covers you for fire, vandalism, theft, glass breakage. If you hit an animal like a deer, that's considered comprehensive. you're usually better off going with a lower deductible on that coverage. Couple reasons. One, it's not as expensive as collision, so the difference between deductibles is not large. Quite frankly, a lot of times we see a difference between a $100 comprehensive deductible and $1,000 being to the tune of about $1.50 a month difference. You replace a windshield once every couple of years, you've paid for that already. The other portion is that majority of companies, State Farm being one of them, do not consider comprehensive to be your fault whatsoever. It's literally known in the industry as the act of God coverage. So it's not your fault. Majority of companies are not going to rate poorly against you or surcharge you because you had one of these losses. And other thing too is if you crack your windshield, you have a $1,000 deductible, chances are that's going to be on you. There used to be days and time where every insurance company offered free glass coverage, and it was separate from comprehensive. Well, what happened is that any person who owned a Mini Cooper would set up at Meyer with a free window glass repair and start just billing insurance companies. Now they're starting to take that free glass repair away, and that is part of comprehensive. So a lot of times off, you are better having a lower deductible for that. One last thing I want to say with that is, in Michigan with our no-fault system, we have two different types of collision coverage. There's your standard collision, which is cheaper, and technically you're responsible for your deductible either way, whether you're at fault or not. Or you can pay a little bit more for broad collision, where the company's going to waive your deductible if you're not at fault. To be fair, if you have standard collision and someone hits you, you get a police report, they stick around, and they actually have insurance, we'll help you go to that company and get your deductible back for you. The reality is, though, that in a Tri-County area, there's an estimate that 33% of drivers are driving around without auto insurance right now. So if that person hits you in the parking lot of Kroger, they're not waiting for you to come out. They're not leaving you a note. They're getting out of there. We actually see quite often where you actually get hit and run on the street, and the person will leave and get out of there, even though they have a newer vehicle, because they don't have insurance coverage. Or maybe they have a warrant out for them. Maybe there's a lot of various reasons. So I'd highly recommend go larger deductible on your collision, but make sure it's broad and not standard. You pay a lot for your insurance. You do not want to pay your deductible if someone hits you. Good?
Thank you very much.